The biggest banks in America just walked into the White House to decide the future of crypto, and what happens next could change Bitcoin forever. Stay with me till end of the video so you won't miss the full breakdown. We already talked about this when Coinbase refused the bill because the banks wanted to stop stablecoin yield. On February 10th, top people from traditional banks and crypto companies met at the White House to try to come to a deal that both parties can agree on. Still, the talks ended without agreement because banks didn't change their opinion on stablecoin yield. Banks are saying they will lose up to $6 trillion if the DeFi gave out yields as they used to, because stablecoins like USDC and Tether gave people around 3 to 4% yield when the banks give out only around 0.4%. And the main sticking point is whether people should be allowed to earn interest or yield on their stablecoins. Banks don't want to play on the same level playing field. Why keep money in a regular bank account earning almost nothing when you can park in crypto and make more? This bill to work out the crypto might have to give what the banks want or look for a middle ground. This isn't just some nerdy policy debate. It's about the future of money. If stablecoin yield gets banned in the US, stablecoins stay mostly for transactions, banks keep scamming people, and a lot of cool DeFi stuff might move offshore. If it's allowed, we could see stablecoins turn into real competitors to banks. Faster, programmable money that earns decent returns. Not worried about safety, they're worried about money walking out the door. Anyways, bank will win unless the old system breaks down. Just 2 days left for another potential government shutdown. Polymarket is now showing an 83% chance that the government will partially shut down again by February 14th if lawmakers can't reach a deal on funding the Department of Homeland Security. Negotiations have stalled over disagreements on border security measures, with Republicans pushing for stricter policies and Democrats resisting major changes. If no agreement is reached, non-essential government operations could grind to a halt starting this weekend. Essential services like Social Security payments, air traffic control, and Border Patrol would continue, but hundreds of thousands of federal workers could go without pay, national parks might close, and various agencies would scale back. This will create real uncertainty in the economy. For markets, especially riskier assets like stocks and crypto, shutdowns often mean volatility if the markets aren't priced in already. Lawmakers are still talking, and last-minute deals have pulled us back from the brink before. But with the clock ticking and prediction markets leaning toward a shutdown, it's a situation worth keeping an eye on. Things could change fast in the next few hours. Twitter is still talking about the yen carry trade. Experts are talking about the Bank of Japan could raise rates to 1% in April 2026. This hasn't happened since the mid-1990s. We have talked about the yen carry trade a couple of times already in our channel. Because of that, I don't think explaining what yen carry trade is necessary. This is how Bitcoin has reacted to past Japanese rate hikes. It marks 4 major drops on the Bitcoin chart, each aligned with Japan rate hikes. Each time, Bitcoin dumped more than 20% right after the rate hikes. But there's a chance the markets price in before the event, and some argue the current environment is different. Central banks coordinate more now, and the BOJ rate hike may not cause another dump like before. But April 2026 is definitely circled on a lot of calendars right now. If you're holding Bitcoin or other risk assets, it might be worth keeping an eye on Japanese bond yields and US dollar to Japanese yen in the coming weeks. Macro events like this rarely stay quiet for long. This might bring Bitcoin to $56,000. Think of this as a gift, not financial advice, though. This news sent the dollar uni token more than 25% up in a single day. BlackRock, the world's largest asset manager, created BITL earlier this year as a way to put U.S. Treasury assets on the blockchain. It's a digital version of safe, government-backed investments. Because it is tokenized, it can move around in the decentralized finance space. The fund has already grown to over $2.2 billion in assets, showing serious institutional interest. Uniswap is the largest decentralized exchange on Ethereum. This opens it up to a much wider audience and allows users to trade BUIDL shares directly in Uniswap's liquidity pools. The $Uni token powers governance and fees on Uniswap. BlackRock would need to hold $Uni tokens to participate in governance votes. Recent announcements confirm BlackRock purchased an undisclosed amount of Uni tokens as part of their integration with Uniswap. The firm has not confirmed this. Yesterday's announcement is another step toward mainstream adoption of crypto. The lines between traditional markets and DeFi are blurring more every day. Buying $Uni under this line is a good opportunity in my eyes, but that doesn't mean when the Bitcoin goes down, this won't go another 20% to 40% down. But this is a good accumulation zone. What I'm telling is don't put everything you have in $Uni because of the news. Just buy a bag now and buy another small amount again after a weekly candle close above this line. Again, not financial advice. Don't wait for headlines to tell you what already happened. Be early, be prepared, and subscribe if you want to stay ahead of the next move.